The Kendall Report, where I share my 45 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. In tonight's video, we'll be talking about the Fed and what's likely to happen, and more likely nothing's going to happen. And we'll talk a little bit about the impact of the tension in the Middle East. Let's get into tonight's video. Well, welcome everyone. Well, there's quite a bit going on in the world with the Iranian and Israeli situation. It is starting to get more tense, and I'm hoping that the U.S. does not get involved. And I think this would be a big issue. As I talked about a little bit last night, is if the U.S. gets involved, then we could see the markets crater out a little bit. I still look at all the foundation of everything that we have going on, and everything's pretty solid. We're already seeing a rebound. We just went green here just a second ago. I was trying to buy the dip down at the 60.22 level, got missed by a couple of ticks, which is always frustrating. But the bottom line is what we're seeing here is the market starting to roll just a little bit, ever so slightly, pretty much what we did in the Tuesday session is what we're expecting from that standpoint. But as far as anything right now, we're not going to have anything to respond to, I think, in the Iranian and Israeli situation for several days. I think maybe I'm just hoping that Trump backs out, like I said. As we look at the Fed is just stuck right in the middle. And I made a joke on one of my thumbnails the other day is no moss. I mean, the Fed wants nothing, no more. You know, they have no relevance whatsoever in the markets right now. So I know on Twitter and some other places, people are telling me there's a small chance that they're going to lower 0.25. Well, why? I don't know why they would do that. But if they did, what would it mean? It would mean the same thing, nothing. There's really nothing that Fed is going to do here from the standpoint of trying to stimulate the economy, the markets. That's not their job. And Paul's going to tell you that. My expectation tomorrow on the Fed meeting is that you'll get the same rhetoric that you've been hearing for a while. Nothing's going to change. Fed's not going to make any actions. Nothing's going to happen whatsoever. So the Fed's not going to be much help, although typically when they're talking, we do get a kick up and volatility and those type of things. So we did see a bit of a move down in yesterday's market. So we have the Fed coming out. Let me look at something here very quickly. Just when we look at the expectations here, I just want to, I'm looking at last night's, so we come in to the 18th here, we've got housing starts coming in. We saw the housing market get slammed. The House bill slammed all the solar stocks. So the whole subsidy of the Green New Deal is at least dying for the next several years, and probably will continue to die for the most part. But so we get the permits, housing starts. We'll get the crude oil inventories. That's going to be totally irrelevant because everything is focused in on the war right now. So, and in tonight's video, I'll go through crude oil expectations because that's going to be an important thing to watch for. We've got, of course, the FOMC decision, and that's going to be mute. I don't think we're going to get anything out of there that's going to tell us what the market's going to do. And, you know, we're still in the dog days of summer. Nothing seems to be changing unless we get some big event out of this war, or they shut down the Straits of Hormuz or something like that. Then crude oil gets very interesting very quickly. And I'll show you from a technical standpoint what I think is going to be happening there. So I'm just going in and verifying that the WaveTech database has been updated. And as soon as I can get that verified, I will do that. Just bear with me 1 second here. Yeah, we're okay. Everything's ready to go. So let's go ahead. New format. I'm going to go through things very quickly and as I can to get the clarity, and then we're going to end the podcast. So I'm trying to go for under 30 minutes every day now. So let's go ahead and take a look at the database. As we take a look here, see we're at 7263. We did have starting to get some exits here. It's possible, I'll check this number, that the database is still updating. Sometimes there's a little lag on this number updating here. But we did get roughly a bit over 1,000 cells, and we got about 240 new entries. So we're definitely starting to see some negative rotation. Like I said, I'm expecting to see this come down 62, 58%. I think in the Substack last night that was pretty clear. If you don't get the Substack, kendallreport.substack.com, $8 a month. You get 4 trades out of the trade sheets there, and everything goes. So just so you know, I'm putting a video together on the data sheets, because those of you that have the indicators already will be able to get those pretty quick. I've got 2 things I want to finish, and just trying to get, I want to make sure everything's good and clear, because once I release this, it will open Pandora's box for me, and I don't want to get a bunch of emails and you don't know how to use it. So I'm trying to get some things together which will save us all time in the end. So, but as far as the database goes, there's really nothing here. So let's go ahead and take a look at the markets here. This is a weekly. Let me go over to the daily S&P. And this is what I was talking about last night, that we'd see the market grid turn back down and start to get a little channel coming in. We're doing that. We actually have penetrated through the 10-day moving average right now. We look at the PPMs, and they're all showing a slight loss of momentum. What we're likely to see from where we are right now is ultimately a move down to the 200 and the 40. This 40 is rising under this pattern, so as it goes through, we may end up holding around 59.20, 59.50 in that range. And we're just seeing, I mean, this is a terrible pattern. I'm just going to bring this up full. It just is climbing the wall of worry, and it looks like the 10-day moving average is going to roll down, and ultimately, if this forecast becomes reality, then once we get through the 21-day moving average, we should roll down all the way to the 200, and that would be the extreme. That's 58. We're just going to round numbers, 58.50 from there. As far as tomorrow, we're looking at the, I'll blow up this so you can see the market grid over here on the side. I'm going to bring up the data sheet here in just a minute, but we're looking at the range 61.34, 59.41 extremes. I don't think we'll get anything from Powell to kick up the volatility to that level, but we'll see here. And let me publish this sheet here. All right, let me just come up full screen here for just a minute. Bear with me 1 second. All right. Sorry, it's taking longer than I thought. All right, so here's the data sheet for today. 60% range compression makes sense. This is pretty much what I was talking about, where that 21 is going to be the depths of this. Volatility is probably going to collapse, although tomorrow we may get a little spike. But if we can't even get a volatility spike out of the Fed, then that would tell you really what the conditions of the markets are really like right now. Neutral on PPM 1 and 2. We're below the maintenance mode, but we're not negative. So we still have a slight positive tone here. We're also looking at PPM 3 still in a trend plus mode. And that just tells you that that 40 period moving average I was just talking about will be the extreme as long as we stay over the 0.15. That should be the number. That's why I'm focusing in on that number. So R1 60.60, we're trading 60.38 right now. S1 is 60.14. We didn't quite get to that. We're still trading within those ranges right now. Let's see if there's any trade signals here that are worth looking at. Yeah, it says it breaks 60.61 will run up to 60.86. So that's your breakout trade, and then buying support entry 60.15. I tried to buy 20s and it rallied from about 22 all the way up to 38 right now. So that trade may already occurred. So let's go back to and go to the NASDAQ. So these setups here, the ranges are so tight. We're looking at the 10 period moving average right now is at the 21,801. Last trade here, 21,950. So we're a little bit above here. If I bring that, I can zero in. The low end of the range was right around the 10, but you can see this is the forecast I was talking about on the S&P, where looks like we're going to start to decline out of here. And you can see the red dots are also showing that the path is a bit to the downside from there. We'll take a quick look at the 10-year. So yeah, just get the Substack. That's where all the microanalysis will be before the open in the morning. That typically comes out around between 5 and 6 a.m. every night, just before the open. All right, so let's go ahead and let's go to the 10-year. We came back into that range I've been going on about, 435, 450. We came right back in. Looked like we're getting a move back up. We'll look at the PPMs. Looks like there's going to be a bit of surge. I'll show you the crude oil chart. If anything's going to mess up the Fed tomorrow, it's going to be the fact that the crude oil is going to bring in an inflationary element. And they're still talking. If you listen to talking heads and on CNBC and what have you, they're still talking tariffs. I'm doing that, air quotes, because the tariffs are not really going to be in effect. And they're talking, well, it's probably going to be a one-time bump, but it could spread. And it's just all rhetoric, folks. It's all noise. And if we look at what's being forecasted here, it's just dog days of summer. And even with all this crazy background noise with the geopolitical risk and all that, at the moment, I'm just going to stay with the Fed. And I don't think we're going to have any news out of the Middle East unless, we'll just have to. That's too dynamic and too unpredictable. So, but the 10-year is right back down to the extreme here on the daily. I'm just going to bring up the weekly just so you can see exactly what's going on there. And the weekly charts, we've got a little more latitude to move, 430, 426 extreme to the downside. We get nowhere near that. We might get down to the 40 period, which is right now at 433. We're basically there right now. So we're not going to get much below where we are right now. All right, let's go to crude oil. It was interesting. I'm going to stay weekly here. If you recall, I did a review last week. We had a couple, I think it was a couple weeks ago when I covered crude, and I said, looks like we could move up to the 200. And you think, well, I always mention these fib targets because if you have to pay attention when you see them. And then you look for the confirmation from the PPM. So if you see PPMs being forecasted higher, you got new fib targets. Well, that's what was happening. If you recall, I was talking, well, the fib targets are confirming that we're likely to go. And that was a big move because we were talking over here. If I just bring up the prices, the price right over here. Sorry, the price here was back at 61 bucks. So, what's going to make it go to 78, 80 bucks? Well, we now know what it is. And even though we're seeing this weekly, we're seeing this bump up this 200. What's being forecasted is that this is going to come back into these moving averages, but we're going to be next level. We're going to be staying above the 40 period, simple 40. So bring that up on your charts, get that value. Simple 40, we should drift sideways to down. I suspect if we can close a little bit lower than we did last week, this is a weekly graph, if we close a little bit lower on Friday, then we'll see the market grid turn down and volatility start to contract. So as I tell you all the time, when you get these volatility blow-ups, we have to normalize. This is pretty much a channel. We're not seeing the bubble, if you will, where we get full expansion. So we'll see what we get out of here, but it looks like we should stay under the 200, roll over to the sidewise, and ultimately come back into these moving averages, which would obviously suggest somehow we don't escalate this thing in Iran and Israel. We kind of, everything starts to contract, because that wouldn't be the pattern that we would have on here right now. So we'll go with the technicals and assume that the fundamentals are there for it to blow up, no pun intended, but for the markets to kind of stay elevated here for a couple weeks. And even the momentum, if we look at PPM, we're looking at a very strong momentum, 1.42 on PPM1, which tells me that we're going to still have a strong bias. I don't think we get above the 200. If we do, I don't think it can stay there in this configuration, but we got to watch and see. But I just want you to have that set up. So let's go ahead and go to gold. And one of the things I was talking about, when you get that excitement that we saw last Friday and you see gold surge, now that this thing's been going on for a few days, we'll see some contraction and the market's starting to kind of pull in a little bit from the standpoint of all of the geopolitical tension has faded a little bit, even though they're still shooting missiles and doing things that would suggest that it's more escalated. As I said, I touched on this the other night. I was starting to go into it last night on the Substack. Maybe I will see what inspires me tonight when I'm looking at it. But the typical geopolitical situation like we saw in Israel and in Tehran is only lasts for maximum around 2 weeks, and I'll round it up a little bit. 13 days, 4.1% downside max is a typical move, and one of those. And usually you get that reaction and then it fades, and that's what we're seeing. Same thing here in gold. We're seeing it try to come back into its 10-week moving average, which is going to be, let me just bring up that value, 3,331. So that will be that range is right where that 10 is right there right now. So I don't see any big move up or down. If anything, we fade back in here. Same thing with crude oil, stable with still bullish momentum, but upward bias, but we're going to be working along that 10-week moving average on both of those markets. All right, let's do Bitcoin. So Bitcoin on a weekly is still fading. As I've been talking, we have probably another week or so with extreme bias to the upside. If we can't get above there, we're going to see Bitcoin flow back in toward the lower ends of the market grid and ultimately probably getting below the 10-week moving average and heading toward the 21-week moving average from that standpoint. So let's go to daily. You know, Bitcoin is most of the time is just a risk-on asset, and like I said, probably maybe 10 or 15% of the time it becomes an alternative asset. We've seen it act a little differently than the risk-on markets, and then it comes back and it becomes a risk-on asset again. So I suspect that would be the case. The dailies are really below all the averages. Really the key is going to be that 10-week moving average on this chart. All right, so maybe the word's out. We're not getting quite the viewership as before. Maybe I should do hour long, but I really would like to continue to get through this. I would suggest that you do a couple things. You can go get the indicators at kendallreport.com/indicators, and or get the Substack, and that will be, I think, integral in following me. And when appropriate, I'll go into some big rants when there's something going on and go into some more in-depth analysis. But right now, it's pretty typical stuff that's going on. So we'll go ahead and go with the short broadcast. As always, I really appreciate folks showing up. Let me just see if there's any questions pending out there. Yeah, that's a good call because we do have a holiday on Thursday. Thanks for that, Bo. I probably won't do anything on Thursday night. So there will be a Substack on Thursday. There won't be anything to cover. So Thursday night I'll do the Substack, and then tomorrow night we'll see what comes out of the Fed. I possibly will do something to set up for Friday's opening, and we will have some aftermarket trading. So that's a good call on that. Yeah, just looking here. Yeah, you're probably right. A lot of vacations and stuff. Okay, yeah, so that'll cover it. But anyway, as always, thank you for being part of this channel. I'm working on some really cool stuff yet. I'm trying to get this data sheets out. I think that's going to be interesting. Like I said, I got to do it right because I already know my inbox is going to blow up and all kinds of questions, and it's going to blow everything up. So the plan is, just real quick on the release of the data sheets, is I'm going to do a video because there's some quirky stuff that happens with working with AI that has to be talked about. So I'm going to do my best troubleshooting and have a place where you folks can go and see that video. And I'm working on getting a manual together for the indicators as well. So that's going to be, those are the two main projects I have right now. Anyway, folks, thanks for watching. I appreciate it. And I will talk to you. Yeah, we'll do something tomorrow night. So plan on tomorrow night after the Fed. Absolutely. All right, folks, have a good evening. Talk to you soon.